Good morning, it's Friday the 17th of February. This is the Phoenix Blue Update presented this morning by Tom Colley. Well, it's Friday again, last trading day of the week. So a summary of what we've seen this week. Well, the net position is really a great deal of uncertainty. The early part of the week we saw the dollar bulls taking control. We had some really stunning data out of the States, particularly on CPI and retail. We had Janet Yellen, the Fed chairman, giving a statement and a Q&A where she could almost be described as hawkish in terms of rate rises, etc., all pushing dollar strength. We had more good data out yesterday, but the trend or the bull run has been broken. All this confirms is there is a huge amount of uncertainty in the market. We've reflected that this week in that our trading has been almost exclusively intraday, in and out trading, simply because there is no clear direction. It's not the most interesting time to trade whilst we wait for that certainty to come, but it is one of the arts of trading, which is to be sat on your hands, watching the markets, waiting for the market to come to you or to give you signals that high probability trades are available again. Okay, let's have a look at the news first. This is some of the really strong data we had out yesterday. We had building permits coming in ahead of forecast, but look at this number here, the Philly Fed Manufacturing Index. We had a forecast of 18.5 and the actual was 43.3. Now that was the biggest beating of the forecast for 30 years. So that really was a massive figure, and we would expect in a normal market, although this particular data point isn't the most important and the most significant, the volume of that result would normally expect us to see a substantial move to the long side on the dollar. We didn't see that yesterday, and all that did was really emphasize to us the huge degree of uncertainty there is in the market, because even data like that and the data we had, I think it was Wednesday, where we had all the CPIs and the retails and everyone was considerably above forecast. That was some of the best data seen for a number of years, but still the dollar, that wasn't sufficient to give the lead hand over to the dollar bulls. We had unemployment claims in, which came in roughly on forecast. We then had a late announced press conference by Donald Trump. There really wasn't much for traders in there. The only comment really that maybe was significant was he continued to talk the stock markets up, in that he said, look what the stock markets are doing and we haven't even done anything yet. But apart from that, a lot more of it was more about his administration and, shall we say, more political matters, which didn't have a direct influence on the markets. Then last night we had disappointing retail sales out of New Zealand, backing up what's been disappointing data and a relatively negative picture from the central bank last week. Quiet week for news events today, and quiet day for news events. We've got retail sales out on the pound at 9:30, so obviously the risk of volatility in that market, but I have to be honest, that's not a market that we're overly focused on at the moment, because there is equally as much uncertainty on the pound side of that pound US pair as there is on the US pair itself. So over to the charts. Well, this is the bull run through last week and the early part of this week. We'd seen a breakout of this falling wedge to the upside. We'd broken through one level here, but we then stopped and turned on a sixpence as such at this point here, and then we've only seen dollar weakness since then, despite that stunning data. The big batch of data on Wednesday afternoon, price pushed right up to this point, hit support and resistance on some of the majors and minors, and just turned, and to somewhat great surprise, everybody would have anticipated a reaction or some pullback at support or resistance, but it turned into a full-blown retracement, and now, as we can see, we've clearly broken this upward trend. We're in a downtrend. The question is, how far down will it go? We're in a position where we can say there's still this potential head and shoulders is setting up here. The key level for that is in around $100 here, which is the neckline. If we see a break to that, then we have a genuine setup for a head and shoulders formation. And traditionally, you would expect, if that was to happen, the measure between the neckline and the highs would be at least duplicated on the move down. So for the sake of argument, we could see a move down back to the low of the night of the election through here. If that pattern was to play out as it's normally expected, although I don't think we necessarily see that play out quite as much these days as we used to. But the point being is, if we get the wrong side of 100 here, then the dollar bears will have taken control. Whilst we're above that side, the dollar bulls are fighting. They're still ahead of the game, but if the bears can get below that level, then certainly our medium-term bias on dollar strength will have to be revised. Over on the yen, again, very similar formation, not quite as clean, but again, we've got the downside here. If you can see a little red mark through there, that's from a smaller time frame. As I've already said, our trading this week was predominantly intraday. We took a nice intraday trade through the yen as it pulled back just below the retest of this trend line yesterday, but taking the trade, closing the trade by the end of the day, as you would with an intraday trade, because of the current uncertainty in the market. Where are we here? Well, there's a very nice level through here at 1112.55. That's the next logical level to look for support. We'll be looking to correlate that with the dollar index and also the euro, which we have, again, very, very similar formation. That's obviously not unexpected. We've got the downtrend's been broken. This is the support level that I talked about, that the really strong news, the dollar bulls forced the dollar down to that level, but then we saw that extreme reaction on Wednesday, which was a bigger reaction than we anticipated, and immediately we have we're more cautious, because we would have expected a pullback and then that level to break based on that really strong data. So again, very much the same picture here. The key level here is probably the 108 around this area here. That's the neckline of the inverse head and shoulder setup there. So that would correlate with the $100 level on the dollar index potentially. And obviously, if both break at the same time or both bounce at the same time, that will confirm that correlation. But again, this is a market being on the other side of the dollar, which is exactly the same, a great deal of uncertainty. We will go away at the weekend after today's markets, analyse the data and see what we come up with in our analysis for our watch list next week. But I'm willing to predict we will remain very cautious on the majors and minors simply because of this dollar uncertainty. One area where we are seeing some divergence in currencies is the Antipodean currencies, the Aussie and the Kiwi. We're seeing Aussie strength that's been benefiting from rising commodity prices, good data out of China, their major trading partner. So we're seeing the Aussie being bullish. It's obviously in the last day and a half or so it has benefited from the weakening in the dollar. But the converse side to that is we're seeing a weakening of the Kiwi as they have had poor data, and in contrast to the Aussie Central Bank, they were very dovish in their statements about interest rates. They still see interest rate reductions potentially on the table, whereas the converse, or the diametric opposite, is true of the RBA, the Reserve Bank of Australia. Now, what we've got at this level through here is a very key zone. You'll see the Aussie is at or approaching key levels across all its cross pairs. And the question is very much, will we see a reaction to this zone and a return to the downside? Obviously, the dollar will have an influence in that area. Or will we see this Aussie strength play out, a break of these highs above here, above this level here, and in which case we will definitely be bullish to the long side on the Aussie. Now that would clearly play out if we see the head and shoulders on the dollar index play out and we see dollar weakness. So the Aussie is definitely a market to have your eyes on. It's not necessarily a market to be actually trading today, but the key levels through here, you see I've got an order through here at about, I think that's 07775 the order, but there's probably an even more key level at about 78.35, 78.40 there, which we will be looking for a break, as I say, to the upside or a reaction to the downside. Again, we'll look to correlate that because that timing there could correlate with a bottom on the dollar index in the same way as that would correlate with a top on the euro dollar. Okay, this is the Kiwi. As we can see, we've got downside on the Kiwi. We had the data that I showed you earlier, which is more poor data. So we were seeing a retracement on the dollar weakness, but that data through last night has given us another bearish run there. This has helped us in one of the only long-term trades we're in at the moment. This was the New Zealand CAD trade. This was more a technical trade than a one with a fundamental bias. We traded from this level at the top here. We took 2 entries through here. We were in a 3rd entry on an intraday basis through here. We got profits off the table, stop at break even, and then we were taken out on this pullback through there. Yesterday we took another order through this level here, again to the short side. We do see longer term short side. We've got an immediate level for our next area that we'll be watching, but there is potential to see further downside in this market if we see a continuing weakening of the of CAD and of the New Zealand dollar, and also we will be have our eyes on CAD at this moment in time. CAD is very, very rangy, so not really giving much away one way or the other in terms of strength or weakness. We get weakness on the Kiwi side and we'll see downside in that area. One other thing to mention, we've been talking about our cocoa trade. This week we had another strong bullish day on cocoa. Not really worth showing you the chart on that respect. The interesting factor on that is almost all the other agricultural commodities came out of yesterday and have gone in today very bearish, whereas cocoa seems to be bucking that trend, so it does reinforce the bottom that we called earlier in the week against a commitment of traders signal, and we are looking for further upside to that, and we'll be looking to scale in as we get through appropriate resistance. Okay guys, that's it for today. Have a great weekend, get your analysis, get some time away from the screens, and let's come back on Monday with a fresh look at everything, and hope that some of the uncertainty gives way to some direction so we can get some more regular trading in next week. Okay, thanks for listening and have a great weekend. Goodbye.